This is our video Forex blog for December 10th. Starting with the currency meter, this is something that new traders can learn very quickly. It shows the statistical strength of all of the currencies in comparison to all the rest of them. And you got the real-time strength or weakness on the top in histogram form. Anything at or above the dotted white line is extreme strength or weakness. And then underneath that you have the weekly and monthly trend. So in a perfect day you have a weekly and monthly trend that's up and some real-time strength from 8 to 10 here in the dollar, and weakness in the yen. Earlier today, weakness in the euro. So, you can trade a weak euro that's also weak over the last weekly basis and monthly basis against one of the stronger pairs. Today, the Australian dollar was strong earlier and the yen was weak, and so you could look for buys in the Australian yen. Strong Australian, weak yen. Let's bring that chart up. And notice also the price is above the hourly. You can also see on this individual chart the daily, weekly, monthly trends up. It didn't have a lot of statistical strength throughout the day, but there are quite a few trades here. When a price breaks from underneath above the hourly and comes back and tests it, that's a good place to buy. Also, when it makes a higher high and pulls back, also with less weakness on the way down than strength on the way up, also a good place to buy. This did not have a whole lot of strength today. It never hit our extreme level, but knowing that the daily, weekly, monthly trend's up, knowing that it's above the hourly and thus more likely to go up, gave you many buying opportunities. They didn't result in huge moves, but it was a high probability trade. The New Zealand, very weak over the last weekly and monthly basis, and weak from 7 till about 1 o'clock. You got a strong dollar for the most part during that time, and so you want to sell the weak New Zealand against a strong dollar. We look to sell the New Zealand dollar from that time. Look, 7 o'clock's right here. This had just broken above the 10-day moving average in the previous day's high. It went up with a lot of strength, and then it double topped here with almost no strength. So because the weekly and monthly trend's down, counter trend traders should be looking to sell up here. I might have gone short here when it broke the 10-day moving average, and it was confirmed when it broke back underneath the previous day's high. This acted as resistance twice, so it should have been support here, and it was earlier. So once it gets broken, everybody who bought realizes their trade's not likely to work, and you got a mass exodus of this currency in the direction of the longer term trend. The hourly moving average is your profit target, but it shot right through there, so you just keep yanking your stop down, and that was an excellent 50 pip move. And a currency meter oftentimes finds these type of moves. You also have a very strong CAD right here. The weekly trend just shifted up. The monthly trend's pretty strong. The yen is weak. So guess what? You can buy the strong CAD versus a weak yen. And look what happens. The weekly and monthly trends up. We have a double bottom near the 10-day moving average here, which is a support level. It's likely to be buying. It fell with almost no weakness. And you have a double bottom with no weakness, and the longer term trends up. Aggressive traders might went long right here when it broke back above the previous day's low. Now you have the hourly and this fib level here that's likely to be a profit target, but it shot right through them. So it went all the way up to the previous month's high, and then it ran out of steam up there, and you exit your trade. You might have been in this trade at 75, out around 10 for a 35 pip move. Let's just quickly go through some of our other currencies. Euro dollar, this one has a weekly and monthly trends that's down. It went up earlier today with very little strength. It fell with incredible weakness. You might have actually went to look to go short right here, but guess what? As it was falling here, there's no weakness. So you get out of that trade with a small profit or a break-even trade, and then it's above the hourly, you might look to buy. But knowing that the weekly monthly trend's down, you're not likely to make much money fighting the longer term trend. And then right here, you have a beautiful wedge pattern. This currency made a high, a lower high, and a lower high. And it's got a nice beautiful wedge pattern. That's one of the reasons why we teach patterns too. And you can see throughout the day the momentum on down moves was much bigger than the momentum on up moves. See that? Bigger weakness and strength, bigger weakness and strength. And guess what? When this finally broke down, it went in the direction of the daily, weekly, monthly trend, and it fell about 70 pips. So whether you got out here with a 30 or 40 pip move, got short again here and picked up another 30 pips, it's up to you. Notice it didn't have extreme weakness on the way down, so what I usually advise traders is try to exit where the Fibonacci profit target is, and look at that. Draw these fibs on your chart yourself, don't take my word for it. See how often they work. Pound dollar. Now, the weekly trend was up, the monthly trend was down. You have major selling above here. So I would avoid this currency like the plague, even though it's above the hourly, until it breaks through all this resistance. You only want to take trades that are likely to give you 1.5 to 2 times more likely profit than what you risk. And so how do you know where the likely profit is? Well, I use support resistance areas. You got a lot of areas right here that's likely to be selling, and it was selling for 4 or 5 hours. Then when it broke through here, this area was likely to be some selling, but it didn't. There weren't any sellers there. So once it comes back down and can't get back underneath it, it's pretty much confirmed that it's likely to go up. The weekly trend's up. That's the primary one I use. But I'm well aware that the monthly trend's down, and so you're not likely to make too much on this. Here is this move right here. You draw your fibs and notice the 1.618 almost to the pip was the end of the move, and it went up with very little statistical momentum. Anytime I get in a currency and I don't see the statistical momentum spike up and come close to the dotted 20 line, you know, it's a pretty big sign that you want to take 20, 30 pips max. And as soon as it stalls and starts to come down, you want to exit your trade. Aggressive counter trend traders, knowing that this went up with almost no strength and it going sideways right here, notice this sideways action right here, our statistical trend strength was down. That means that the pound's falling against other currencies and the dollar's getting stronger. And so, you know, you got this nice little counter trend move. I want to keep this, most of the currencies were pretty dead today, so that's it for today's video trading blog for December 10th.